Saudi Arabia's budget deficit widened in September quarter due to a drop in oil revenues from lower prices. The kingdom is now working to navigate fiscal constraints in its $1.2 trillion economy. The Saudi government needs to balance hundreds of billions of dollars in outlays to drive Crown Prince Mohammed bin Salman's economic diversification plan. However, the challenge is the depressed oil prices that is weighing on export revenue. The kingdom's budget shortfall for the 3 months through September was 88.5 billion riyals or $23.6 billion. The September quarter shortfall accounted for nearly half of the cumulative deficit of nearly $50 billion for this year. Those figures were according to the projections from the Ministry of Finance. Oil earnings were about $40 billion from a little under $51 billion a year ago. Revenue from sources other than oil remained stable at $31.7 billion. In fact, earlier this month, the government said that it was anticipating a larger deficit this year than its prior years. That is largely due to higher spending on economic diversification plan and lower revenues from oil. Saudi Arabia more than doubles budget gap estimate for 2025. The deficit for 2025 is now pegged at 5.3% from an earlier prediction of 2.3% of its GDP. The kingdom has been running budget deficits since 2022 as prices of global benchmark Brent hold well below levels that are needed for fiscal balance. Oil prices have dropped about 10% this year to below $70 a barrel. Bloomberg Economics predicts the kingdom needs oil prices at $94 per barrel to fix its finances.